But of course, silver isn't just an industrial metal. It's also a precious metal. And it used to be, up until the depends on the country, 1960s or 1970s, 1940s in some countries, it used to be a monetary metal. In other words, it circulated as part of the coinage and was widely used because it was valuable because of the precious metal content. So even today, it's still regarded as a monetary metal which protects purchasing power during times of uncertainty. It functions as a hedge against inflation and provides security and trust when the financial system feels shaky.
The main bullish case for silver is straightforward. Since 2021, demand has been higher than supply, and Clive Thompson believes this pattern is still continuing. He explains that by 2026, it could mark 6 years in a row where the market is in deficit, meaning more silver is being used than produced. As a result, available stockpiles keep shrinking as real demand absorbs more of the metal. This creates a situation of growing scarcity. Thompson points to increasing demand for physical delivery and warns that if investor interest rises as well, the shortage could become even more severe. He also highlights the gold-silver ratio, which dropped from above 100 to about 60, showing that silver has recently performed better than gold. According to him, if this ratio moves back toward its historical average, silver could nearly double in price, especially if gold stays stable and market conditions remain supportive. Now, let's return to the interview.
So we'll go here and have a look there. So what we see here is that in 2025, every single month, more silver was demanded for delivery, the more delivery notices given than there were the year before. You can see that just by comparing 2024 with 2025. 2026 started off in the same vein, with January having much more being demanded for delivery, and February. As for March, it fell back, still more than 2024, but less than 2025. And April, we're only halfway through April. So it looks like April will come in very similar to 2025, but well above 2024. As far as May is concerned, May is usually a very big month for deliveries. So that we wait to see that figure. But if that figure comes in at 15,000 contracts, it'll be a lot of silver being delivered. And I'll talk about that in just a second. So let's look at this chart. The blue line that you see going here is the registered ounces of silver, which is held at CME warehouses. It's been going down for years, but just this is the recent trend heading downwards. And the dotted red line is a kind of projection. This green line shows what happened with March. The March open interest collapsed just before the first delivery day. So we may see the same thing happen with the May open interest, which is here, the purple line. That may collapse down to zero just before the first delivery day as both longs and shorts close their positions. It's a perfectly normal phenomenon. It's what usually happens. I expect it to happen again. But what happens if the deliveries are actually taken out of COMEX? Well, I wanted to show this orange line here where it says May 2025. That orange line corresponds to the number of ounces taken out in 2025. Not taken out, but where delivery notice was served. So in 2025, there we are. In 2025, 75 million ounces were called for delivery. 75 million. That's a lot of ounces called for delivery. So May is going to be potentially a very big month. But March, which was normally 80 million, or was last year 80 million ounces, only 46 million were called for delivery. So will we see the same phenomenon, not 75 million, but maybe just half of that called for delivery? Either way, I want you to just go back to that chart I showed you a second ago, this one here, where you can see that red line is showing you the equivalent of 85 million ounces that's potentially going to be called for delivery if the same amount is called for delivery as was called a year ago. When I say 75 million ounces, I mean 75 million ounces was called a year ago, and the amount we've got potentially here is about 75 million ounces of registered. The registered silver is here, the blue line, and that's what was called last year. So we could easily get all of the silver in stock at CME called for delivery. But as I say, that doesn't mean to say the silver will leave the CME warehouses. All that happens is the ownership changes hands. But of course, it is looking like it might be a squeeze of sorts, but we kind of expected that at the end of January, and then suddenly they raised the margins and all the prices collapsed. So I'm not going to say what's going to happen this time because we don't know, but I'm fairly optimistic for the silver price given the supply constraints. Now, what happens if physical investment demand increases? Industry experts say it might increase by 20% this year. Well, we don't know, but let's say that silver investment demand does increase. That will further exacerbate the shortage of silver on the marketplace. Next, I'd like to look with you at something called the gold-silver ratio. I've got it here. The symbol is XAU-USD divided by XAG-USD. And you can see the gold-silver ratio basically declining from over 100 to now, let's get that figure as a number, to now around 60. So what that means is silver has been outperforming gold over the last year. But is 60 the right number? Should it be higher or should it be lower? Well, we can go back in time here on this chart. We'll go back to, I'll put it as far as possible. So we're now back to the 1970s, and you can see the gold-silver ratio was around between 20 and 40. So if that gold-silver ratio was to get back to the 20 to 40 range, let's call it 30, it would basically mean effectively from today's price a doubling of silver if the gold price stays constant. But you can see the long-term trend. We're heading back, well, I'll go back here. If I just expand this bit here, in fact, I'll put it as a line chart. Yeah, you see this sharp drop here. This is where silver starts to outperform gold. The question is, will it continue to do so, and will we continue downwards, meaning silver outperforms? It looks to me like it will, so I'm a positive bull on silver for that. Now, of course, the bullish structure of silver is well known. It's compelling and it's well supported. But because it's widely known and to a significant degree already reflected in current prices, there might not be as much upside as people are hoping for. Markets are discounting mechanisms. They discount the future. And when a narrative becomes well known, the risk of disappointment increases. So it could well be that silver's already reflecting this huge demand increase in the future. But, you know, my real point here is the deficit is real. The industrial demand is strong and growing. And
Clive Thompson says silver is in a unique position because it is both limited in supply and heavily used across modern industries. He explains that for years the market has been running a deficit, meaning more silver is being used than produced, which slowly reduces available stockpiles. At the same time, mining output has struggled to keep up while demand continues to rise. This growing imbalance gives silver a strong foundation and makes it an asset worth paying attention to. As a wealth manager and macro analyst, Clive Thompson believes silver offers a compelling opportunity in today's uncertain economic environment. He points out that it is not without risk, but its overall structure remains supportive. He highlights increasing industrial demand coming from sectors like electronics, solar energy, electric vehicles, and emerging technologies tied to AI. Alongside this, he emphasizes silver's long-standing role as a monetary metal that can help preserve purchasing power when confidence in traditional financial systems weakens.
now we get to silver, which I think is the most compelling asset to hold in your portfolio right now. It doesn't mean to say you should have a large position. It just means that I think that some silver in a portfolio is going to be a good idea for the coming years. And this is not investment advice. This is just my personal opinion. And you shouldn't take advice from a guy who's retired and not working in the financial industry. So let's start by looking at the Silver Institute's supply and demand. And I'll focus first of all on this top line here, which is called mine production. And we can see that mine production has been falling. Over the last decade, we have seen mine production fall from 900 million ounces down to 835 million ounces. So there's been a fall from 900 to 835 in mine production in millions of ounces. And the total supply, including all sources, has dropped from 1,057,000 to 1,030,000. So what we can see, first of all, is that silver production or silver availability coming out of the mines or other sources is not going up. Rather, it depends whether you look at mines, it's falling steadily, or if it's looking at other sources, it's still falling. So production is falling, or availability of new silver is falling. And then we look at the demand side down here, and we see that the demand has risen from 993 million to 1,148,000,000 million, or 1.1 billion, if you like. So demand has been rising. And a couple of years ago, we saw the crossover point where this was 2021, where the demand here at the bottom, 1102, exceeded the supply of 1023. And we've been in deficit ever since then. So the bedrock of the silver argument is the persistent deficit since 2021. And 2026 will mark the 6th consecutive year where demand exceeds what miners can produce. In 2025 alone, demand outpaced supply by 170 million ounces, with mine production stagnating at just over, according to this, just over this number here. If we look at it, they say 835 million ounces. There could be some discussions about whether that figure is correct, because it is just a forecast. Obviously, the final numbers are not in yet. So when a market, including silver, runs a deficit year after year, it's eating into the above-ground stockpiles. And there are a lot of above-ground stockpiles, but they're still finite. And as stockpiles shrink, holders become increasingly reluctant to sell unless prices rise. That's a classic scarcity dynamic that's been a major driver behind silver, and especially behind silver's recent strength. And there's very little evidence that the deficit will be resolved in 2026 or beyond. The next point on silver is the price performance. Silver has risen. If we look at a one-year chart, I'll just bring that up as a percentage instead. So we'll do that percentage, and we're on 1 year. There we are. Over 1 year, silver is up 142%. Towards the end of January, silver very briefly breached the $100 level, going up to something like $126 very, very briefly. But even at these high levels, the structural argument remains intact because the deficit hasn't closed and doesn't look like it's going to close. The demand for silver continues to rise constantly and steadily due to increased usage in the electronics industry and, of course, the solar panel industry. But, of course, silver isn't just an industrial metal. It's also a precious metal. And it used to be, up until the depends on the country, 1960s or 1970s, 1940s in some countries, it used to be a monetary metal. In other words, it circulated as part of the coinage and was widely used because it was valuable because of the precious metal content. So even today, it's still regarded as a monetary metal which protects purchasing power during times of uncertainty. It functions as a hedge against inflation and provides security and trust when the financial system feels shaky. As far as its use as an industrial commodity goes, it's still rising. Obviously, the demand is surging from solar panel manufacturing and electric motor vehicle production. But of course, AI production is also adding a boost at the moment. Now, we remember that the USA reclassified silver as a critical mineral, which underscores its strategic importance. And it also means that US agencies can now start to stockpile silver if they choose to do so. Let's look at interest rates. So interest rates are on hold, and the debate is out whether that rates will go down or up. Obviously, rising rates are bad for precious metals and falling rates are good for precious metals. It's hard to say which one's going to come next, but where we are at the moment is the Fed is on hold. It doesn't know whether to go left or right, but we've had several years of quantitative tightening. But at the Federal Reserve, we've gone into what's called quantitative easing. I'm not sure if it's QE3 or QE4 now, but they have stopped shrinking their balance sheet. Their balance sheet is now expanding, and that basically means money is being printed. We have a looser monetary policy, and looser monetary policy benefits scarce assets. Now, if we get a rate cut at all, and that is where the consensus still lies, it will benefit precious metals in general.
Clive Thompson explains that silver demand has been consistently strong, with more and more metal requested for physical delivery each year. In 2025, every month showed higher delivery demand than the year before, and 2026 has started in a similar way. Even though some months go up and down, the overall trend is still higher than previous years. He says May is usually a very important month, so it will help show how strong demand really is. He also points out that silver stored in COMEX warehouses has been falling for years, while delivery demand keeps rising. This creates pressure on supply. In some cases, trading positions drop sharply just before delivery, which shows how active and tight the market can become when physical silver is needed. Clive adds that if investment demand increases this year, it could make the shortage even worse. More buyers competing for limited supply would increase stress in the market. He also talks about the gold to silver ratio, which has dropped from over 100 to about 60. This means silver has been performing better than gold. Historically, this ratio has often been much lower, so if it returns closer to past levels, silver could still have room to rise. In the end, Clive remains positive on silver. He sees strong demand, limited supply, and growing industrial use as key reasons why silver could stay strong over time, even if prices move up and down in the short term. Thank you for watching and see you in the next video.